Welcome again to Fruitful Investment Strategies. If this is your first time, please make sure that you grab a cup of tea and you click on like and share these videos because here we are about to share things that will actually help us. We will learn many more things as we come here and things that we can apply in really economical life. So recently we have heard about Donald Trump imposing the tariffs on other countries. So the question is, what is the tariff? A tariff is a tax imposed on the commodities that is actually brought from another country into your country. So when it comes into your country or it's about to enter into your country, it has to pay a tax. So that can be from a range of anything that you want actually to impose those tariffs. So usually it's used to actually hinder other people to go and buy things from outside if that is threatening a local market or a local product that is actually installed in the, or a local product which is actually in the country. So you hinder those products from dying or disappearing, so impose your tariffs so that you can protect that market. And that's how Donald Trump, that's how countries deal with tariffs. So recently Donald Trump has imposed tariffs. And this is actually not to kind of, this is not to really hinder, in trying to kind of promote trade or trying to promote industrialization in his country, in the United States. He has imposed tariffs on countries. So that is, as he puts it well, making America great again, bringing industries back again. So he's trying to bring industries back to the United States and to promote industrialization. But one thing is that America is not really dependent on industrialization anymore. It's one of the largest, it is the largest continent or country when it comes to actually trading. And America has all that it needs. Now America is much more into service providing. So America provides more services, and those services have actually a big chunk of the economy of the United States. Now you have China, which is actually much more of an industrialized country, which is actually producing services like we can go from cars even to baby products and everything that you need. The Chinese, they have it. So America wants to bring that all those businesses of industrialization back from Asia. But I think that would be a challenge in terms of doing that, because you need real infrastructure to do that. You need billions and billions of money to actually install those kind of industrialization commodities and companies. You need actually land. You need the people who actually can do that. America does not have that kind of people who actually are willing to work in big and large companies, because the cost of labor is actually much more higher than it is in Asia. And in Asia, not only the cost of labor is lower, but you have also people willing to do those kind of jobs. In America, people have moved from those kind of jobs. They are not willing to do that kind of jobs. So hence, there is not that actually labor. I can talk, for example, in Europe. In Europe, most of the people who can actually work into construction work, these are Polish people. Not saying that all other people cannot do it, but mostly it's Polish people, because they have that labor, they have that strength to do those kind of work. In Western countries, in England, or let's say in other France or any other country like Norway, they take advantage of that labor because it's a cheap labor as well, which contribute to the development of their country and to the development of the continent as well. So you have that difference, which is actually playing in terms of labor as well, and industrialization. Industrialization, you need labor. You need actually to have these big companies which cost a lot of money to move all those production lines. You need a lot of money. And you actually have to need that knowledge, and the knowledge, it's actually much more local. The people that are working in this country, they have developed a certain kind of knowledge that is going to apply into the production of these kind of things. So America want to bring those kind of work back again. So that in itself is a very big challenge to see those work being brought back to the USA. But the thing is, can this tariff work? Yes, it can work at a certain level, but it can have a big impact on the world as well, on the world stage. Because what is going to happen is that when they impose the tariff, which means the commodities or the price that actually has been put on the commodity will have to be passed on from the seller to actually the buyer. So you know, when you buy something which you're buying, I don't know, 10 crowns or let's say $10, and then it has been increased with 10%, so it becomes, let's say, $11. So the thing is, if you're buying it $10, you're going to buy it $11 so that actually the buyer can actually have money, and all those costs have to be passed on, and they have to be passed on normal people like you and me. So that's where tariffs are coming in. And this is actually a negotiating point which Donald Trump wants to use in order to bring other countries in terms of negotiating, seeing it that America is, or Donald Trump is thinking, he thinks that other countries have taken leverage of America, and since other countries have taken leverage of America, so he wants to bring that, you know, that development back, that money back, that wealth back. But this is really an impossible thing, since America is all about sharing wealth. From Europe to Asia, America has been there as a blessing of other countries in terms of opening up the market. So with these trade, you know, taxes, or call them taxes. So with these taxes, you limit trade between countries. So this tariff has been imposed on all the countries, from Europe to China, from China to Iran, from Iran to any country that you know, it is there. But the hardest hit, but the thing is, how did actually he do these calculations? That is the problem. You know, you need to do a certain calculation. So I don't think they based it on just tariffs that actually other country impose on America. No, because this was supposed to be a reciprocal action, but it's not really a reciprocal action, because they have actually they have done the calculation in another way. That's economist. I'm not an economist, but I'll speak about what the economists are saying. The economists are saying what Donald Trump has done does not really make sense in that way. But the thing is, he has done a calculation, and based on those calculations, he has actually given each and every country the tariffs. So according to what he thinks, these countries are actually taxing the US commodities which is coming into those countries. So for example, according to the calculation of the White House of the United States, they think that according to, for example, China, and its tariff and trade barriers that China has imposed, its values up to 67% of tariffs for the American goods. So USA has been able to impose 34% of tariff on China. So if you impose 34% of goods in China, which means if any country goes and buy anything into China and they're bringing it into the United States, they have to increase the price of the good with 34%. Until there is an establishment of these production lines and of these industries into the United States, you have to see those kind of things happening again. So from China, for example, the European Union, America thinks that European Union imposes 39% of tariff. That is nearly 40. And they have imposed 20% tariff. So anything that comes in the United States from America has to have 20%, have to pay 20% of the tax. So you see, all this is going to have a big impact on the buyers, so on the people who are actually buying those commodities. So Vietnam, for example, they have calculated that Vietnam imposed a tariff of up to 90%, and the USA has imposed 46% of goods from Vietnam. And we know this, Vietnam, China, these are countries which produce a lot of commodities. When you're talking about commodities, we're talking about from anything from camera, iPhone, cars. You know, they produce those things, and those things will actually have an increase of up to 46 and 34% respectively, China and Vietnam. But the thing is, Chinese cars do not actually go in the United States because they have a tariff of 100%. So 100% tariff if you want to actually buy Chinese cars. But these are very developed cars, and these are very good, nice cars, which does not exist in the United States. So if you want to see some of these cars, please make sure that you check some of my videos actually in this video. So you have also Taiwan, which is actually a trading member of the United States, and the United States promised to protect this island from China. So they impose 64% of tariffs on the United States, and the United States is imposing 32% of tariff on Taiwan. So you go so on. Japan has 46%, and then they get 24% from the United States. India 52%, and then you get 26% from the United States. So every country has been really into the tariff. But what surprised me was actually this small island, which actually lies on the bottom of the planet, which has actually a lot of dwellers there are penguins. The United States has also imposed tariffs on that. So that was actually really funny to see that penguins have to pay tariffs for the good that they export or buy. So this being said, tariff, it's really a tough world now. When you have to actually do businesses with the United States, it will take you to actually notice that you have to pay more tariffs. But this might have consequences to the United States, negative consequences. The negative consequences may be that the American economy goes downward, and then you have an inflation, which means everything becomes very expensive and nobody's able to afford, and then the dollar becomes very devaluated, and then nobody is able to buy, and everything just becomes, businesses goes down with it. We have seen at the stock market how businesses went down, and that is one thing which actually may be negative for the United States, that the market just goes down, and then you have a very bad economy in the next few years, because there is less productivity, and the businesses have actually fallen down, and there is no money to actually provide to actually make these industries go and benefit. Because if you impose tariffs for the small businesses which actually come from China, which do businesses with China, these businesses are not able to actually transform their business into a what? Into industrialization. So that may actually have a very big impact on the economy. But on the other hand, it is that if he is successful, Donald Trump, this might mean that the businesses or the industries come back to the United States, and when they come back to the United States, you have actually a profitable businesses which are flourishing, and you have a strong economy in the United States. If that happens, but if that does not happen, you have a problem. So if that happens, which means there is a production of more work, more jobs, and which we have seen, which you have seen, Apple is actually going to invest up to $500 billion in the United States. We have also seen other companies like chip makers who are actually promising to, from Taiwan, promising to invest up to $200 billion in the United States. These are large sums. You have seen Qatar as well promising to give billions and billions of money in the in investment in the United States. So there is a chance that this might succeed. There is also a chance that this might hit the wall. And if this does hit the wall, it becomes very dangerous. So tell me what you think about it and let me know. I'll see you in the next one. And please make sure that you like, you share, you subscribe, and do not forget to comment. Tell us, is it good? Have you learned something? We want to know that. See you on the next one.